Okay, wonderful.
Hey guys, we're here with Maggie Love, co-founder of Web3 Cloud and the founder of SheFi. And I'll let her take it from here.
Okay, can everybody hear and see? Okay. Oh. Okay. Yep, okay, got it. Sorry, I was thinking, I wasn't sure. Okay, so I just really want to quickly first say that, wow, this conference is so impressive. There's, looks like there's over 2,000 people here, which both makes me nervous, but it's just a testament for how well Shinju has organized this and everybody that has made this happen and allowed our community to come together during this crazy time. And I also want to just say, I hope that everybody is doing well. So my name is Maggie Love. As Shinju said, I'm co-founder and director of business development for a project called Web3 Cloud, which is building blockchain compute infrastructure. And I recently founded and announced an initiative called SheFi, which is hoping to onboard more women into the area of decentralized finance. And it also acts as a vehicle to donate funds to charity. So in the spirit of SheFi, which is really breaking down these DeFi concepts into something simple and accessible, I'm actually super excited to give the What the Fi is DeFi presentation. So what I'm going to attempt to do is give an overview of DeFi in about 20-25 minutes, which, as you can see from attending this conference, is quite the challenge. But let's begin. What the Fi is DeFi? So really quickly, I want to set some expectations. You will not leave this presentation knowing how to build the Millennium Falcon of DeFi Legos, but I will be going over the starter kit of DeFi Legos. Hopefully, you leave with some information that makes you think, wow, everything in DeFi is awesome. And I cannot tell you how happy it makes me to finally make this dad joke on a public forum. And now I hope the song is not stuck in your head. And if it is, apologies. Here we see the uptick in the number of DeFi projects, the different value metrics, and the concept of money Legos as a meme. And you know, once something is memed, it's legit. But what is DeFi exactly? To keep it simple, DeFi is traditional and not so traditional financial tools and services reimagined in a peer-to-peer framework. Some of these financial services and tools being built in DeFi are stablecoins, lending platforms for lending and borrowing, exchanges, derivatives, insurance, and more. These are the use cases that we'll be focusing on today. When I said reimagined in a peer-to-peer framework, I meant DeFi is built on top of blockchains like Ethereum. So these protocols are decentralized, permissionless, transparent, censorship resistant, and have programmable assets, and we like to say in DeFi, programmable money. So basically, everything built on a blockchain has the benefits of blockchain behind it. So what? I wanted to just say, from my point of view, what really excites me about DeFi. What excites me is that we are breaking down the barriers of banking and the walls of Wall Street. Governments and banks cannot restrict or regulate, yet, your assets or access to DeFi. Services that are traditionally only for a certain class are now for everyone. And you don't need a large amount of wealth to grow your wealth. The future of money is digital, programmable, and unstoppable. And a disclaimer before we get started, we're still at the early days of DeFi, so there are definitely technical, financial, and regulatory risks that can make the money Lego meme look more like Jenga blocks, as you probably heard. So never put more money in DeFi than you can afford to lose. Also, before we get started, this cousin of DeFi, CeFi, has been popping up a lot, and it's important to know the difference. So CeFi projects are crypto products and platforms managed by a centralized organization that, well, centralizes everything. DeFi products and platforms are built, as we mentioned, on permissionless blockchains, and many of the components are decentralized, but not always all of them. So on the left here, you have CeFi projects. On the right, you have examples of DeFi projects. On the left, you have to trust the company, and on the right, you have to trust the protocol. And just really quickly, the decentralized in DeFi is a spectrum. I created this chart from the How Decentralized is DeFi, a framework for classifying lending protocols, to easily show you that just because a project is titled DeFi doesn't mean it's totally decentralized. This chart shows you on the left and in the first row, degree 1 is non-custodial, but it doesn't use any of the other decentralized components listed. As we go to the right, more of the decentralized components are incorporated to get a fully decentralized platform. So these are the different things you can be looking for and thinking about when you're determining how decentralized is a DeFi project. So really quickly, I want to do an overview of the use cases we'll cover today and think about them in terms of activities. So with stablecoins, I want a currency that is stable in value to transact with. For lending and borrowing, I want to earn interest on my crypto or take out a loan without a middleman or complex terms. If I'm on an exchange, I want to easily trade between multiple currencies and or tokens at the best prices. If I'm going to become a trader and use derivatives, I want exposure to the value and performance of an asset without having to hold it. And finally, with insurance, I definitely want to purchase protection for my crypto. So let's dive into the first use case here, stablecoins. We all know and we all hope the cryptocurrency vision is to replace fiat currency globally as everyday currency. But we also know, because our emotions are deeply tied to the prices of these assets, that they are very volatile. So our everyday transactions require the value of fiat currencies being stable. And the digital economy also needs stable money. Enter stablecoins. Stablecoins are tokens pegged one-to-one to other stable assets. Pegging is the practice of fixing the exchange rate of one currency to another. As an example, let's look at DAI and USDC. They are both tokens that are pegged one-to-one to the US dollar. Yet, they're not exactly the same and employ different pegging mechanisms. DAI is decentralized, backed by crypto, and USDC is centralized and backed by fiat, the US dollar. And so what's the big deal about stablecoins? Well, the creation of stablecoins has allowed for the proliferation of many financial applications, payments, trading, savings, loans, and more. And stablecoins are money, meaning they are a medium of exchange, a store of value, and a unit of account. On this slide, I also included a picture from CoinGecko of the most popular stablecoins at the moment by market cap. And there's many more than 10. Okay, let's now look at lending and borrowing. So there used to be a problem that after you purchased your crypto, it sat idle in a wallet or an exchange. Now, with the advent of lending platforms, people can put their money to work and increase its value. Lending platforms have created decentralized money markets, where you can lend your crypto to earn interest on it, or you can borrow this crypto to use elsewhere. And as a reminder, when you borrow crypto, you have to pay it back with the interest accumulated. An interest rate is the charge for borrowing or the price of money. Lending platforms such as compound finance use liquidity pools. This means that users lend and borrow from a smart contract that pools liquidity together, not to other users. There are many benefits of liquidity pools, including that it cuts out negotiating with the middleman, a very popular reoccurring thing we'll talk about with DeFi, cutting out middlemen. It allows for protocols to have higher liquidity and more, as you can see on the slide. So what? Why should I lend my crypto on a lending platform? Well, to me, it's quite simple. Your idle crypto is earning 0% interest. Your fiat is earning almost 0% interest. And so this is a really easy way to make some more value off of your crypto. Just as an example, I'm a Chase Bank user. So I went to Chase Bank to look and see what my interest rate was on my savings account, which that is kind of like your savings account is almost you lending to the bank. As you know, when you put your money in the savings account, the bank is actually using it to lend out to other people. They just don't really always clarify that. Anyway, the annual percentage yield or the interest on that was 0.01%. And today on Compound, if I were to lend DAI, I would get 3.33 interest on my DAI. As you know, these fluctuate as well, these interest rates. So sometimes they can be as high as 11%. Sometimes they, get closer to 0%. Next up, let's talk about exchanges, which were some of the earliest use cases in DeFi. So exchanges are venues to exchange, buy, and sell crypto, and to exchange fiat currency for crypto. So there's centralized exchanges and decentralized exchanges. Centralized exchanges are operated by a single entity, and decentralized exchanges aim to address the centralization problem by using smart contracts to reduce or eliminate the middleman. Let's look at the pros and cons of both. Centralized exchanges are easier for newcomers to use, have better liquidity, but they are a single point of failure or attack. And as we know, if you're not custodying your own keys, it's not your crypto. Decentralized exchanges have the benefits of no single points of failure, lower fees, no KYC, but they are often less liquid. And since we are talking about DeFi today, I wanted to talk a little bit more about decentralized exchanges. There's two types of decentralized exchanges at the moment. There's order book based and liquidity pool based. On an order book exchange, a user places buy and sell orders at specific market prices, but the liquidity here can be an issue. To address liquidity issues, liquidity pool-based exchanges do not have users trade against a person, but instead against a smart contract that has a large pool of tokens available. Okay, now we are getting into more complex financial topics. And here's to hoping I don't lose you with some dry financial lingo. A derivative is a contract that derives its value from the performance of an underlying entity or group of entities. Different derivatives serve different purposes. So maybe I want to hedge against an asset's volatility, or speculate on an asset's performance, or leverage my holdings. Trading these requires expertise. So definitely read up and gain this expertise before you do derivatives. That is code for do not use this 101 deck to start trading derivatives. Synthetics are a type of derivative that give a trader exposure to an underlying asset, let's say gold, without her having to physically own the gold. With this synthetic asset, she can frictionlessly trade between asset types like synthetic gold for synthetic Bitcoin. And she also doesn't have to go through a middleman to do so. A very popular synthetics platform in DeFi is Synthetics, and a user can get exposure to the following assets, group of assets, and more. Cryptocurrencies like Bitcoin, fiat currencies like USD, and indexes like DeFi. Just to pause here and do a reminder, crypto and DeFi are risky for users. A few types of risk include the financial volatility of assets that can lead to liquidity risks, the technical aspects of a bug being on a smart contract, in a smart contract that can be hacked, centralization risks of keys being held by teams and those team members can be compromised, and the fact that platforms are unregulated. I know that we always don't want to talk about the BZX hack and the Fulcrum hack, and it was the first one, but just a very interesting moment is I was actually at Ethereum Denver when this happened, and I was making my way around that morning to the different DeFi tables to introduce myself. And I'm at the Fulcrum table. I'm noticing like, wow, this table is empty. And naturally, I open my phone. I have Twitter open because I'm at a crypto event, and I immediately see that there's been a hack. And it was just like, oh, this makes sense. Anyway, this is kind of this hack was the first of many. So just remember, be careful and know your risks. And, to address these risks, the community is constantly trying to assess the risk of these different platforms. And so I just wanted to show you an example of one for lending platforms, which is the DeFi score. And it's trying to use a 0 to 10 score to assess these risks and always taking community feedback. So how do you protect yourself from these risks? Well, buying insurance. There are different types of insurance in the DeFi space right now, including covers and options. So first, let's talk about covers. Covers allow our user to buy coverage against a smart contract risk or bug. To do so, the user specifies the smart contract, the time period, and the amount they want to cover, and get paid out later if there's an event. So let's say a negative event occurs, then the claims process kicks off, and if a user is approved, she is paid. Options are another type of insurance tool. So they are a derivative contract that allows a user to protect against both technical and financial risks. In comparison, the covers that we just covered only cover technical failures. Options cover both technical and financial risks. There are two types of options, calls and puts. Stick with me here while I try to explain these. A call is the right to purchase a specific asset at a set price within a specific time period. A put is the right to sell a specific asset at a set price within a specific time period. So what I'm saying here is if a user buys options, they buy the right to decide to buy or sell in the future. I'll do my best now to take you through an example of a put option where a user is hedging against the price of ETH. So on the Open, OPYN platform, you can see the list of options, of put options available to you as a user. So I'm scrolling through and I decide that I can let the price of ETH, which is, I haven't looked today, I'm gonna be honest, around 200, hopefully. And I decide that I'm okay with letting it slip to 160 USDC. So I go over and I pay the protection cost in ETH. And let's say a negative event were to happen and the price drops dramatically below 160, I can still redeem that $160 of USDC because I purchased it ahead of time and there's no claims process. So it happens immediately. Okay. Now that we've done all the use cases, I wanted to cover a few key concepts across these different use cases and protocols, including collateralization, liquidity, pools, and composability. Collateralization is talked about a lot in DeFi. So this is when a borrower pledges an asset that a lender can claim if the borrower defaults on that loan. And why is this? Well, it's an incentive to actually pay back the loan. Many protocols require a user to collateralize their loans: MakerDAO, Compound, Open, Synthetics, and more. Specifically in DeFi, a user must over-collateralize her loan, so the value of the collateral that she supplies exceeds the amount she borrows. For example, if a user is required to post 150% collateral for her loan on $100 worth of DAI, she supplies $150 of ETH. Another key concept that we've discussed already today is liquidity pools in lending and exchanges. I want to highlight again a few things to know. They reduce the need to wait for a counterparty to interact with, and pools can be shared across protocols, increasing the total liquidity on any of them, and they reduce the risks of liquidity evaporating in a major event. And finally, back to money Legos, in case you forgot about the song already. So the importance of building the blocks of DeFi on smart contract platforms is that these smart contracts are interoperable across platforms. Like Legos, they plug into each other and can be combined in creative ways to build even more DeFi projects. So here, I took this from a Medium article, which I linked at the bottom by Total. They show some Lego pieces. So on the MakerDAO Lego piece, there's the DAI piece and the custom smart contract by MakerDAO. On Compound, the Lego pieces include DAI, the customer smart contract for MakerDAO, and the Compound smart contract. For Ethereum, there's the MakerDAO CDP tool, Compound, Uniswap, MetaMask, IM Token, Trust Wallet, Coinbase Wallet. And then over to Total, you get even more. But this is what's really exciting, is the fact that it's this open finance and interoperable financial tools and services built in smart contracts. It's just really opening up to a really exciting variety of projects that we can see in DeFi. So a quick summary here. DeFi is the traditional and not so traditional financial tools and services reimagined in a peer-to-peer framework. These financial tools and services include stablecoins, lending, borrowing, trading, derivatives, insurance, and even more that I could not possibly cover today. DeFi is built on top of blockchain, meaning the protocols are decentralized, transparent, permissionless, censorship-resistant, and programmable. There are degrees of decentralization in DeFi, with many of the projects working towards being fully decentralized. Key components across these protocols are collateralization, liquidity pools, and composability. And finally, DeFi allows users to access financial services traditionally hidden behind bank approvals and provides new opportunities for people to generate wealth globally. I wanted just to highlight my so what again. So I really love this concept that we're breaking down the barriers of banking and the walls of Wall Street. Governments and banks cannot restrict or regulate your assets or access to DeFi. Financial services that were traditionally only for a certain class or behind banking approvals are now for all of us. You don't need a large amount of wealth to grow your wealth, and the future of money is digital, programmable, and unstoppable. Finally, I just wanted to close with this vision statement from Sid from Coinbase. So imagine a global, open alternative to every financial service you use today. Savings, loans, trading, insurance, and more. Accessible to anyone in the world with a smartphone and an internet connection. So thank you, everybody. If you have any more questions for me or want to know some of the links that I used, feel free to email me at maggie@shefi.org and then give me a week or two and I will get back to you. And then you can follow me on Twitter, I guess, as we all do on in the crypto space. So if we do get back to in-person events again, I can awkwardly go and be like, hey, I think I know you from Twitter, and we can be friends. So let me, okay, is this the questions part? Or?
Yep, it's the questions part. So if you guys have any questions, drop in the chat and she'll be able to go over it for the next 9 minutes.
Yes, I will post the slides. I have a few more edits to make, and then I will be sure to share them with everybody. What can we do now to help? It depends. I think if you can start building, definitely do that. If you're a communicator, definitely look at the articles out there and think about how can I make this more accessible? How can I break down a CDP so my friends understand it? Something I'm really excited at, something I really want to do with SheFi is not just educate on DeFi, but also personal finance. Because if you don't know what an interest rate is, or if you don't know what debt is, if you live in a city like New York, so you're not going to buy a house and take out a mortgage, how do we make sure we can't just onboard people into a decentralized finance system if they're already excluded from the traditional financial system? So think about ways to make personal finance and DeFi accessible. Find ways to start playing with the projects. I think all of that will be really beneficial in getting more people into the ecosystem. What products of DeFi do I particularly use? So I really like, I've used Compound. I've also played a lot with Instadap. And I would say I have accumulated DAI in every way that you can, except with the MakerDAO vault. So Uniswap, using MetaMask Mobile, using Argent Wallet. I love Argent Wallet. It's so cool. And you can get your crypto in there and then like immediately start using it in other lending platforms, the DAI savings rate. So shout out to that team. You can do this in MetaMask as well. So I'm really enjoying the platforms or the products that kind of bring all these projects to me in one place, and then I can easily access them. So the regulatory environment around DeFi, I would say it's mainly gray, and we haven't seen all of the claims potentially come out or come up or be even brought to court. So, you know, I do not know the specifics. I'm not a lawyer, so I don't know the specifics on what exactly is happening right now. If anybody is a lawyer in here or follows it, definitely feel free to post. But it's definitely like it's something to keep in mind, right, while you're using DeFi. How worried should we be with the centralized asset integration in DeFi? I mean, there's always the risk of being tied to a government that backs a fiat currency, of like something crazy happening. I guess if there was a run on the banks and you had your money in USDC, I'm not sure how that would impact that. So you're adding in more of those external factors that you have to think about. But that doesn't necessarily, but so that's kind of those risks that are inherent with government-backed currencies you have to think about. In terms of them being integrated into DeFi, you have the choice to use whatever stable coin you want, whatever decentralized asset you want. So I'm not sure the compounding risk it has, I guess if it's used for collateral, but I would say in general, if you are somebody who is all in on this decentralized world we're building, like definitely try to use the decentralized versions of the stable coins. But I mean, if you're someone who's just trying to grow wealth and you see a great yield on a stable coin, I'm not going to say you shouldn't do that. Like use DeFi and how it's going to help you most, and think about what your priorities are when you're using it. I'm trying to look at the chat and make sure. Oh, the top DeFi products, I don't know. I wouldn't say I know what the top ones are, but I really like using Argent Wallet, which incorporates a lot of DeFi, Compound, the DAI savings rate. This isn't DeFi, but if you haven't renamed your ENS wallet yet, or one of them to something fun, it's really easy. So for SheFi, I have one, shefi.eth. And then when you type it in and you see it pop up in MetaMask, I think that's cool because it's like we're really making progress. I'm making this like a Venmo type, if you're not in the States, payment where you can use your phone and just type in a username.
ASAP.
Okay, I'm not sure if there's any questions I missed.
You want to transition to the split screen view?
So if I did miss any questions, like I said, I would love you to contact my email, but I would prefer if you did it to get more access to more resources. And if you do have questions, feel free to ping me on Twitter, and if I have the time, I'll always try to reach out. And since we're at the end here, once again, I hope everyone's staying healthy and safe, and I hope this was informative and not too dry. Okay, I don't know if I just stay on or not. And I hope I get to see a lot of you in person sometime soon as well. And we can think about the ways to broaden the access to DeFi and educate
the links to more people. Resources? Okay, cool. All right, cool. I'm going to transition people over now.
Bye, everyone. Thank you so much.
All right, we're going to transition now. Thanks so much.